Alrighty, well, good morning, my friends. It is Wednesday, March 5th of 2025. Um, we have a pretty good lesson to go over from yesterday's market. There always seems to be just really great teachable scenarios that end up playing out. And yesterday was another kind of picture perfect situation. So let's go back to yesterday. Of course, the market's heavy. We didn't really have a whole bunch of signs for the bulls. We did kind of expect the market to keep going. Of course, anything's possible. But that was kind of the general idea when we came in yesterday. Not a whole lot for the bulls in the cards, with the caveat and the understanding that things can always change on the drop of a dime. And I put that in the news report this morning because, again, we still just have a whole lot of clues for the bears. We do have a couple signs for the bulls this morning, which we'll talk about in the planning session. But anyway, I digress. So let's look at yesterday. Now, you guys know I jumped in short a whole bunch of times yesterday, not necessarily in the best spots. I think probably the best trade that I took was the test of the 200 for that pullback into 46. And that was pulling back. And I did tell you guys in the news report here, might as well bring it up. I don't ever really pull it up onto the screen anymore, but I do want to just show you that very clearly yesterday. What happened to the report here? And I mean, this isn't like crazy stuff. This happens almost every day. The day before yesterday, I put right onto the news report that the 59.95 will be an extremely important line in the sand, and that was the high of 2 days ago, right? So on the news report here, the last bullet point, next larger support sticks out from IL 5746 quarter, right? And we said on the bullet point before that, obviously we have that 57.96 and that 90 to 8, 57.90 to 58.10 area, very, very strong area of support and resistance in the market from higher time frames. So we had two general areas of expected support yesterday on the news report. Where did we bounce yesterday? What was the low of the day? There's 57.46 quarter. That is our major roadmap level. We call it a scaffolding. And that was the low of the day. They did come back to it. And this is why I tell you guys, this is another kind of teachable scenario here, is that a lot of times the market is not going to move. In fact, most of the time, the market is not going to move in a straight line. So even though we get support from the area we want to see support from, doesn't mean they're going to just go and just bounce 100 points from there. They did bring it right back to that area, test it a second and a third time. Again, they never broke it by more than a couple ticks. The low of the day yesterday was 57.44. So again, maybe 2 points through the area. And then that was it. That was the low of the day. And the market ripped from there, 100 points or whatever it was. So I want to talk about what ended up lining up down here and why it was a clue and how we can forecast the market putting together signals and levels, right? So there was I'm not going to spend the time right now to explain why 57.46 quarter was such an important area in the chart, all right? Maybe you should join us as a member, and we can get into the details of how we decide where these areas are. I do kind of give you some little nuggets in these morning reports, but a whole bunch of crap was lining up right there. So it's not surprising that that's exactly where we got a double bottom yesterday and then got, multiples, nearly 100 points or over 100 point bounce from there. So we had a level, plain as day, and from there, we get the bounce. So I want to talk about what was lining up down here. I don't think I was trading at this point. I think I got short. I made my money, and I know we were coming into here, but I think I walked away at that point. I don't remember exactly. But as we tested the first time, first of all, just to show you from the shortest time frame that we have, when they came down and tested into the level, and remember, this is a higher time frame area of support and resistance, so you can kind of consider this a little zone of maybe, a point and a half above, a point and a half below, little 3-4 point pocket of expected support. So coming into it, bouncing just in front, going through it by a point or two and bouncing, for all intents and purposes, that is the very zone of expected support. So we nail it to the tick, and we're going to see plenty of examples of how to act and find a trade once we start to move in the direction of a move and see things hold to the tick all the time. But you have to always keep in mind that we're talking about a higher time frame area of support and resistance. Essentially, it's like a 5-point pocket of support, right? So again, with that being said, they still hold to the tick almost all the time, right? But we did get the hold. And just to show you from the shortest time frame, double bottom, bullish divergence, right? This is a very short time frame signal, just the tick chart, 512 tick. But there is your shortest time frame signal for the bulls from the level and the first opportunity from there, right? Now, I'm not too concerned with what happened there on the 512 tick chart. That is a great sign for me to get long if I was trying to get long there. But what I want to show you now is what every other time frame lined up here. Now, what would happen was on the first test, I might have to eat my words here, but I'm pretty sure on the first test, when we bounced off of 46 the first time, we did not have the very pattern I wanted to see for the bounce. And we're gonna find that out right now when we jump up there. But when the second test happened, and this is why it just blows me away how this stuff works, when the second test happened, that's when everything lined up on it, on the 15-minute, the 30-minute. I believe that, and the hourly was showing potential, and then we held the second time and then started to confirm. So let's look at the higher time frames. We'll start to scrutinize that 46 area and see why everything lined up for an expectation of a bounce from there. And then we can start looking at, well, great, now that there's a bounce, how do we get in on the move? And you can see almost every time we get into this type of rotation, what happens is we literally bounce up the roadmap level. So we kind of get through a roadmap level, come back to it, get through the next one, come back to that one. And sometimes they'll skip. It's really strong. They'll just go right through, come to the next one, and come right back to the next one above it, right? So they might go right through one and never come back, kind of like right here and right here. But in many cases, and eventually, you get that guy right there. And like I said, we can see plenty of examples where it will literally one by one step up these like a pair, like you're walking up a flight of stairs. And you can see it here, bam, right here, and then bam, right here, right? And then they kept going. And when you're in a very aggressive, strong market, they're not going to pull back. So you might have to become an aggressive trader and start relying on some of the shorter time frame entry points, right? So let's go up. First of all, let's go to the 3-minute. And let's look at what the 3-minute was showing us here when they came down and tested the very level I've warned you guys would be a very strong support yesterday. So right here, here's that first test. Remember, we looked at it and we saw the 512 tick chart come down, make that little micro double bottom, show the divergence, and then we bounced. Well, when that was happening, what did you have on your 3-minute chart here? We were testing right into the level, and maybe I should turn those things off. And you can see right here, as we're pulling back and then coming in and then pushing through by a couple ticks and making that little double bottom on the 512, what did my 3-minute chart look like? Big potential bullish divergence, right? We were up here on RVI, much higher from the previous swing. The price was much lower. There is very clear divergence going on there. And let me just say this as a caveat, just because there is divergence in a heavy market coming down, maybe like right, oh no, never mind. But sometimes you're going to get divergence in a heavy market. It's not going to hold, and then they're just going to keep going. And that's just the nature of trading, right? I don't need to explain that to anyone who's been in the market for a couple days, a couple weeks, right? But right here is where we get our clues, right? And that's kind of how I call this stuff. These are clues to me. They are not confirmations. They're clues that there is something setting up in the market for the potential for a rotation. So as we're down here, and let's just bring this back. Let's look at the charts the way they would have looked if I was actually here trading. And there is the double bottom right into the level. And here is what my 3-minute chart, what time is that? 10:22. Time is this. This is the candle that closed at 10:24, meaning that it opened at 21. So right as this is opening and playing down here, my RVI is showing divergence on the 3-minute. And then right here, you can see that nice double bottom bullish divergence. Or on that first test, you had the divergence right off of it to the tick. So you had these two clear opportunities, seeing the divergence on the 3-minute as this was happening. And if you acted on that, you did get a pretty decent trade right to, hello, my friends, I teach this every day, right to the 200, where you did have a short, a short opportunity. So that was an actionable short. Didn't actually go in your direction more than about 5 points, which is, hey, grabbing 5 points, $250, not a bad trade. But there is a great example of a hold off the 200 with limited risk, giving you a nice 5-point pullback. But I digress. So beautiful, beautiful 2 opportunities here. We got a 5-pointer there. We got, a 20, 30, 40-pointer if you caught that. Now, that's great, right? We start to get all that. And if we go to the 15-minute here, because I've kind of sharing my secrets recently, on my 15-minute, when we tested into that area, I didn't quite have the very divergence that I saw on the 3-minute, right? So as we're peaking down into 57.46 quarter, I've got to push to very, very extreme price, right? If you just zoom out, so we're just selling off real extreme. And the RVI is down at a more extreme area, although 20 would have been better, but much more extreme compared to all the previous swings. So we didn't have any divergence on the 15-minute when the previous little setup I showed you occurred with the 3-minute chart and the 512, right? So they were both showing it. The 15-minute wasn't. If we go to the 30-minute chart, the 30-minute as well, I'm pretty sure, as we made that first little parry right off the roadmap level, we pushed to that lower low. The RVI was pushing into a lower low as well. And if we were just kind of looking at it as it was testing, we had a lower low on price. We had a lower low on RVI. So I kind of knew if I was sitting here, I don't think I was, maybe I was, I don't remember. I would have assumed as we tested that first test there, that was a clue for a bounce from that level, but not a clue for a major reversal. If I had a 15-minute and a 30-minute signal lining up at the same time as the 3-minute, then maybe that would give me faith for a larger bounce, okay? But the 15-minute and the 30-minute were not showing that on the first test. Hopefully you guys are kind of following me here, trying to make it as clear as possible. Now, the market bounces from there. Like I said, you had a great long opportunity with, again, maybe 2 points of risk there if you took the level to the tick. If you actually waited for that double bottom, you could have got in just below the level and acted on a trade that would have been very, very limited on the risk. But we get the pop, and then they come right back, and they give it another sweet little kiss there. And when they come back the second time, that's when everything lined up. So let's look at that. We'll pull up the 15 and the 30. And on the second test, so here you can see the bounce comes out. We come up. Interestingly enough, we reject right off the roadmap level there at 57.81, which, by the way, we come up. And on the way up here, guys, like I said, we had a short opportunity if you wanted to continue on that side of things. Gave you a pretty decent trade. But on the way up, they come all the way up. And on this way up, if you were looking to act on a trade to get long, there really were no good opportunities other than the first pullback here, right around that 57.50 area. But there was no roadmap level. You could have interpreted the divergence off that swing there, but nothing really to buy, in my opinion, unless you were, again, looking for that typical 50% retracement of a kind of impulsive beginning of an impulsive move out of an area, and you got in off the 50% retrace. I know there's traders that do that. I've traded with them before where they start to get something, sets up, they come to an area where it looks like they make a major swing high or a major swing low in this case, and they wait for that impulse, that first break of the swing, of the previous swing high, and they wait for that 50% retracement to get in, and then they get in. Whether or not there's a roadmap level there or a divergence, right? So that might have been the way they trade. I don't trade that way. I do wait for test into levels. So I wouldn't have had a real good opportunity until this pullback right here into 77 or 770. That would have been kind of the first opportunity there. And then this pullback right here to the 200. At that point, they did pull back a little bit. So I would have missed a much longer push at that point. But you also have to see that my only real entry requirements didn't show up until the market had moved 20, 30 points away, right? So I should have already known if I got in here, I might be at the end of the move already because we did push 20, 30, 40 points out from there, and we just rejected right off the roadmap level. So there's that 57.82 I just talked about, or 81, where you had a nice clear bearish divergence for the pullback there, right? So, and the 3-minute was agreeing with that divergence as we were testing the very roadmap level there. You should see that signal pretty clearly, right? So there was a short there. And then, like I said, this would have been a really good opportunity. Hey, I still made 10 points to the upside off that entry. So I made I made my 2-pointer, made my 4-pointer, made my 5, made my 10. So still a pretty sweet trade. But again, that began the pullback there. So anyway, I'm kind of digressing a little bit here and there, but I do want to then look at what happened here when we tested into the level the second time, because that is where all the other stuff lined up. So let's go back to that 15. Let's go back to that 30 and let's look. So as they tested the second time, if I was sitting here reading the market for you guys, I would have told you right away as they came into that level the second time there, what do we have? Well, the 15-minute was showing very clear divergence. And then here's the second test on the 30-minute. What's the 30-minute showing? Essentially a double bottom, but it's a slightly higher low. And then look at that RVI. Okay, now I have a major area of support I warned you guys about. I've got the 30-minute time frame. I've got the 15-minute time frame. I've got my 3-minute signals lining up here, the first test and the second test. Because what happened here is you basically had a double bottom with a much higher RVI, right? So we get that. And then just to put a little icing on the cake here, we've got our 60-minute chart showing this as we're testing 57.46. A double bottom on RVI. In fact, it was a higher high on RVI and a much lower, a higher low and a much lower low price, right? So you get this hourly potential, you get your 30-minute potential, you get your 15-minute potential, you've got your 512 signals showing bullishness on these tests into these lows, and you have your 3-minute showing divergence on pretty much every test. And from there, my friends, that began, like I said, I think it was like a 100-point bounce, 57.45 all the way up to where'd they get to? Over 100 points higher, right? So that's kind of the stuff. That's how I'm reading this market in real time and how I'm deciding to choose a side for a trade. Sometimes, like I said, I might get in because I don't have an entry until later on. Where was it? Back over here. And then that's the end of the move. But I still was able to make 5-10 points out of it before the rotation happened. And then on this second test, when everything lined up for the bulls, we then get this nice and strong move out. And like I said, I didn't get any signals here to jump in until the test of here at 70, the pullback into the 200 with all this bullish divergence as it was testing. Again, bouncing to the tick, no risk at all, giving yourself a greater than a 10-point bounce off of it. So plenty of opportunity to make money there. And then we get through the next roadmap level here. And yes, it was messy for a while, but then we get this very clear. Oh, I'm sorry, that was not. Yeah, very clear bullish divergence off of the roadmap level. again, the stair-step action, holding the first one, getting up through the next one. It was messy here for a while, so I'm not saying this would have been super sexy to get in at that point, but you did have the signal off the roadmap level for the next bounce, and then this pullback into the FMA the whole way up. Here, all would have been good low-risk opportunities to get in, following the direction of that major signal that was starting to get confirmation, right? So we've got pretty much almost no risk opportunities on the pullbacks, and then of course gets a little messy in here, right? So hopefully you got in tens and tens of points earlier here for the push, because eventually we then get that typical pullback. They hold the roadmap level to the tick, and they bounce out to continue to push at the end of the day. So you guys get the picture here. Hopefully that was a good lesson for you to see how I read the market, and I try to show you sometimes in real time. In fact, we did call a trade short a couple mornings ago while we were doing our pre-market. You had about 5 minutes to enter the trade with me, and I believe that was the high of the day. Again, I gave that trade because I had everything lining up for a larger pullback. So that brought us all the way up, and then interestingly enough, at the end of the day, they pushed all the way to the next major roadmap level with a very clear bearish divergence from the high for a multiple tens of points pullback to finish yesterday out. And on the way down, my friends, there is that beautiful first tag of the 200 after the crossover in a heavy market with a huge bearish divergence as it pushed into it. Okay, so if you didn't make any money for the whole day, in the last hour of the market there, this is selling off. You see your divergence. We're testing the roadmap level on the 200. If you didn't act on that trade, my friends, then you're just not executing the way you should be if you're trying to trade the way I'm teaching you, right? So, and I'm guilty of that from time to time, just not seeing the setup, not putting the trade on, and then watching it transpire into probably the best trade of the afternoon there. And then right at the end of the, getting close to the last couple minutes of the market there, another tag of the 200 holding every test for that pullback. Now, into the extended trading hour at the end of the day, they did pop it right back up, and nothing super notable in there other than the rejection off the 200, rejection basically off 58.12, and then the beautiful pullback at the end of the day to the tick off 58.40 and the bounce off 58.12 to the tick, right? The very roadmap levels we've had on the chart for months now. So that brings us here now into the overnight session where we've had a total chop fest, and we'll jump up to the higher time frames here. Let's move this over to see what's going on. Again, inside of all this chop, my friends, what are the most notable areas of chop? Right inside of these roadmap levels, right? It's like they're blocks, and this is why they are roadmap levels. These are here because on higher time frames, we see this kind of shit happening all day long, right? This is the backbone of the market. This is where the market's going to bounce and reject. Of course, not every single test, right? But anyway, that concludes our lesson for today. I think still just some unbelievable stuff happening day in, day out here. Let's go up. There's not much to say on the higher time frames, which is why I spent more time on this lesson today.